Everyone is buying in US stocks today, and I'm doing the exact opposite. I'm selling US stocks through to the downside. I'm selling US30 through to the downside. I have my own logic to it, and I'm going to explain it to you guys. First of all, let me explain the logic of the people, all right? So, what people expect. Here's the thing. Yesterday, Trump addressed the United Nations, right? And the first 30 minutes of his speech were like, guys, we have a really strong economy and our companies are doing very well and we've accumulated $17 trillion in investments and we did all that and our business sector and my economy is better than Joe Biden's economy and I'm doing very well with money. So basically he was trying to motivate investors to invest in stocks. This is how it was seen. Right? And this is right now what traders are looking at. They're like, okay, Trump just motivated absolutely everyone to invest in US stocks, and this is what everyone is going to be doing today. However, I don't believe that. I believe that today stocks are going to retrace down because I have my own logic to it. Now, let me explain my own logic to this. Here's the thing, guys. First of all, I need to explain a certain logic to you guys. When the Federal Reserve, right, cuts down interest rates aggressively, businesses can usually borrow more money, right? Less interest, more borrowing, right? Because we can borrow for cheaper. So businesses usually will borrow a lot more money. As a result, businesses will expand their business activities. As a result, businesses will make more money. And as a result, stocks will go up. So usually when the Federal Reserve cuts down interest rates, businesses make more money. And as a result, stocks go up. This is the usual basis. This week, what we've seen in the past week, we've seen a 3.17% increase in stock prices through to the upside. Why? And that started even before the interest rate decision was announced. Why? Because investors were expecting that the Federal Reserve is going to cut down interest rates very aggressively from 4.5% all the way down to 4%. They expected that because we have a very weak labor market in the US. All right? So investors were like, of course, the Federal Reserve is going to be responsible enough to fix that labor market by lowering down interest rates. Because in summary, we ease the job market by lowering down interest rates. So this is what investors predicted. Now, Jerome Powell did a meeting and they announced the interest rate decisions and they were like, no, we're not going to cut it down as aggressively as you guys think. And investors were like, but why? And Powell was like, because we don't have an employment problem as you might think. And therefore, I'm not going to cut it down aggressively. And by the way, I'm only cutting it down from 4.5% to 4.25% as a risk management strategy. So it's not because Powell believes that there's a big labor issue, is just as a risk management strategy and as a positioning strategy for what might come next. Investors, of course, hopeful, and I need to make something clear here. Yesterday, Trump addressed the United Nations and he said our economy is doing the best. 1 hour after it, Powell had a speech to do, right? 1 hour after it. And he absolutely decimated what Trump said. And people listen to Powell a lot more, even though Trump is the president. However, Powell is like the money guy. All right, so people listen to him a lot more when it comes to money. And he decimated it. He was like, okay, we have a softening labor market, but at the same time, we don't know what's going to happen with the tariffs that Trump did. They're going to lead to an increase in price in the US, which is bad for us. And therefore, we might have to, I don't know what we're going to do. We might have to raise interest rates, not cut it down. I don't know. And therefore, investors were also expecting that, okay, the Federal Reserve didn't cut down interest rates this time aggressively, but maybe next time they will. What Powell did yesterday is he told people, no, maybe next time I won't. Because Trump did those tariffs and I don't know how it's going to affect inflation. And if it gives us very bad inflation, then I might have to even raise interest rates. So investors were like, oh, so you didn't cut it down now aggressively and you don't intend on cutting it later aggressively? And Powell was like, well, I don't know. I'm going to see how the Trump decisions affect us, the tariff decisions affect us, and then I'm going to decide. But no, for now, I don't intend on cutting it down aggressively. I need to see what happens and then make my decision based on what happens. All right, so investors were even more disappointed by hearing that Powell doesn't intend on cutting down interest rates aggressively later on in the future as they expected. So I believe this is too disappointing news for stocks that interest rates are not going to be cut down aggressively, at the very least for now, until we receive more data that forces us to do that. So therefore, that push through to the upside, that right here, the explanation of it is that investors were expecting a very large interest rate cuts. All right, what they actually got right there, almost, they got half of it. Right, so investors priced into the markets a bigger cut than what they actually got. So I believe that they're going to be a little bit disappointed right here. They are already disappointed. As a result, they're going to believe, okay, no, we believe that the stock market is going to go up a lot more than reality, and therefore the stock market is going to retrace a little bit, at the very least for today, after the Powell speech yesterday night. All right, this is what I see from a fundamental perspective. Now let's discuss the technical perspective for this trade. The technical perspective is also very clear and easy right here. What I can see is I can see that the market pushed up and liquidated this $46,500 psychological level, then pushed down with momentum right here, even bigger momentum than the momentum that it made it up right there. And therefore, this is a clear bearish signal for me. On top of that, we've had these stops right there, 1, 2, and 3. These stops were liquidated through to the upside, and then the market started pushing through to the downside. This is another bearish signal for me from a technical perspective. Now, also we have these bottoms right there through to the downside, these bottoms right there, and we have a big ass trend line that I can draw from the downside all the way through to the upside right there, another trend line that I can draw right here as well, and therefore we have lots of stop losses through to the downside that I believe need to be triggered. So stop losses to the upside were triggered already, stop losses to the downside are left alone and I believe need to be triggered in the future, and that's why basically I can see from a technical perspective that this chart needs to go down and take out these lows. As you can see, I'm entering a 1-to-1 risk to reward ratio, so it's not like I expect a recession, because I don't believe that, okay, economy is doing so bad, let's all sell off our stocks and the US is headed into a recession where I have to sell US30 that hard through to the downside. I don't believe that. I just believe it's a little bit of disappointment based on what investors expected versus what they got from Powell. And therefore, I believe that it's going to retrace a little bit down. It's not necessarily like a big bearish movement through to the downside, but at the very least, a retracement through to the downside that I'm trying to basically benefit from right here. Let's see how that goes. So really not much to add here. US30 just went through to the downside as expected and took out the stop losses below these lows. That's it. There's nothing to add. That's the position. Goodbye, guys.